Hey, everybody, welcome to Earnings Call. Last week, we were taking a look at Marriott, Wynn, Airbnb, Expedia, Affirm, Pinterest, and Toyota Motor. They all declared the travel industry dominated. We're going to take a look at what happened there. And then this week, we are continuing on with Shopify, Home Depot, Spotify, Beaser, Cisco, others. Come join us. Spend the next 20 minutes with us. We're going to go over Earnings Call for this week. Welcome to the show, everybody. My name's Jeffrey Beamer. I'm the senior investment strategist over at ewotrading.com. This show, we focus on earnings each and every week, and we look for those stocks that are about ready to break out and move big, and then those big names that just don't go anywhere. So let's take a look at some headlines from last week. We were dominated by the travel industry, and specifically China. So Marriott, look at this, non-GAAP. I've warned you about this time and time again. Make sure that when you see non-GAAP headlines, if you're a fundamentalist, always look for the GAAP headline as well. They got to report GAAP if they're reporting non-GAAP. Well, they don't have to, but you want them to. But anyway, non-GAAP earnings per share, it missed by a nickel, but the revenue was in line as Marriott was kind of focused on their Chinese result. Reservations were a little sluggish. The stock reacted. If we take a look at the chart, the stock reacted. We expected to move less than 6%. Believe it or not, post earnings, it only moved 1.5%. Perfect, which for expectations. The gap that you see there 2 days later, well, that is election results movement in the stock. I looked for the headline to see what might have transpired there because Marriott is reacting differently than other travel-related stocks that you will see coming up right now. But that was an interesting post-election result as the stock has raced higher by over 8% since the election. So very interesting. As you can see, it's up 1.38% today. So moving on to another travel-related stock, we have Wynn Resorts. They had non-GAAP earnings per share of 90 cents. This missed by over 20 cents. Revenue missed by over $40 million. This was on Macau. Missing expectations. That was one of their biggest properties, biggest numbers coming in from Macau, and those are starting to slip. The company did declare a 25-cent dividend, but if we look at the chart of when, we can see that that really negatively affected the stock as those disappointing earnings, the stock slipped over 9%. We only expected a 6% move, but when you start really missing on your biggest resort, and where your biggest dollars were coming in, the market's going to punish you. Stock is kind of rallying today, up 3%, but it's not recovering a lot since that loss from last week. And you can see that big red candle there, and that sent the stock lower. So moving on to our next headline, which is Airbnb. Airbnb had a earnings per share of $2.13. That missed by just 2 cents. And they beat on revenue of $10 million. And the stock booking reservations or expectations exceeded results, and looking ahead also was positive. And if we look at the stock, market didn't think so. The stock had an expected move of 7%. It moved a little over 8% through earnings. We are recovering today. You can see here on the chart, this lead up into earnings. Okay. We had this, I drew this wedge on my chart for some technical analysis. The stock broke above that going into earnings. And then the day before earnings, we had this big green candle here and then dropped right back down. Today, we're recovering about 1.73%, but a little bigger move than normal for these sub 10% stocks, which we call quiet stocks. It was a little bit more volatile than usual in the travel space. And again, a lot of international pressure on Airbnb to continue to perform. The last one we're going to look at headline-wise was Expedia. This had earnings results on the 7th. And we're expecting a move greater than 15%. I will bring my arrow up to where we had those earnings results. They were right here on this green candle. And then, oh my goodness, sorry about that. Let me get rid of that box. And there we go. and then you see the gap up on Friday, moving higher there, and that move took our trade into the profit zone. We're going to talk about that was our trade of the week last week. We're going to talk about that for just a moment, but we expected a move greater than 15% on Expedia, and the number that came in, I think it was 14% that it closed higher. Actually, just confirming. No, it was only 3.81%. My goodness, really did not move like it usually does. So interesting that a lot of these stocks are kind of consolidating around that 10% bogey that we've established. Some are a little bit more volatile than usual, getting up to that 10% move. Some are more volatile or coming down to that 10%. So we'll keep an eye on that. Now, a stock that really exhibited some volatility here is Affirm. They declared last week. We expected to move around 15%, but take a look at this. It had a 3-day swing of over 30% in volatility. Okay, this stock dropped down, traded lower on Friday, and then rallied back up to close down moderately on Friday. But then today, the stock is up over 18%, and a big move today on some news that's coming out. We'll continue to monitor this. We get follow through to the upside. That could be a real runner. Okay, you can see the stock has been in and up a slight uptrend here, making higher lows. Okay, so as it moves on up, higher lows, and now it just seems to really have gained some momentum and is taking off to the upside. And recent highs, we're back here around $50, and we are trading above that now at 55. That could be a breakout. So watch Affirm this week as it could run away. We will see. Pinterest. As we get near the end of last week, we expected a move around 15%. This is the stock I was actually thinking of. It only moved 14% through earnings again, kind of not moving as much as we expected. And then rallying today, stock's up almost 6%, kind of recovering part of that gap. All right. And for those of you that believe in all gaps fill, let's put that to bed, because you don't know if that's going to happen in a day, a week, a month, a year. We can always look back at the chart and say, oh, it filled the gap. Well, it could have been 3 years later. All right. So we don't know when. And as option traders, we need to know when. Looks like the stock is on its way, possibly. This would be a nice day for Pinterest. If it closes near the high, I would expect this to rally up and at least get back up to 32.5 here, as we're trading at 30.90 right now. And then continuing for last week, the last stock from last week was Toyota Motor. This stock, boy, it snuck through. Everything's quiet with Toyota right now. Not much going on. Stock moved less than 1% on earnings. It did gap up on the election results, okay, and then gap back down after digesting the news. But it didn't gap down, in kind of a violent, aggressive action. It gapped down right into the middle of the channel here. This is kind of a sideways chop that it's going through. And then we made all that up. Friday's loss. We've at least we're trading where the open was on Friday. So we're kind of eliminating that. And the stock could just continue to trade sideways here. This is a $175 stock. And for it to be trading in a narrow range is always pretty interesting. Okay. Always pretty interesting. So that's a recap of some of the earnings that came up last week. Let's get into our earnings outlook for this week, because we still have a bunch of stocks that are declaring earnings this week. Let's see here. What's the number? I have, I think it's about 1,100 companies declaring earnings this week. We were watching 69 of them this week. Okay, not quite as many as last week, but there's still some big names here, as we see. In fact, one stock that I'm going to bring up on my chart here that declared this morning was LINC. And the reason that I'm going to do that is because that was an interesting mover. Okay, this is Lincoln. Oh, come on now. This is Lincoln. I'd like to. Let's see here. Let me bring it up this way. LINC. That was Lincoln Educational Services. And let's see where they dropped. Okay, they're rallying. This stock, man, it gapped up over 16% today, and violent moves within the first 6 minutes of trading. This stock ran up to the high of 1874 and then swung down to the low of 1528 within I don't know, their first 15 minutes of trading. Big swings for Lincoln, currently trading up 4.57% now. But back to our earnings outlook for this week. We begin with some odd names, like Assured Guarantee and Live Nation declaring today also. But tomorrow, as we look at the sheet once again, we have Shopify and Spotify both tomorrow. Those tend to be big movers. On the quiet side, we have Home Depot and we have Oxy. That's Occidental Petroleum, by the way. Beaser Homes. So we do have a home builder declaring. Cisco, Advanced Auto Parts, Walt Disney. Let's take a look at some of these names on the charts. And I'm going to begin with Shopify, okay, because Shopify has had a pretty aggressive run up here the past few days. And that's going into earnings. An interesting candle that is developing here. I was watching this earlier, and implied volatility on the options here are really getting jacked on this. I would expect possibly a big move out of Shopify. Typically, this is a historic mover. Stock, as you can see, is in a big uptrend. Okay, this has always been a very good stock to trade because it's pretty volatile. As we go back and we look at past prices, you can see some of these gaps here. That's an earnings event right there. Okay, this is an earnings event back here, so you can see that historically this stock will this is this is an earnings event right here. Okay, this is an earnings event right here. So this stock is a mover. All right, and we are watching that closely today. All right, now Home Depot is also going to declare tomorrow, and this is a $410 stock. You can see last time, look at this. Last earnings, we looked at this stock. We only had a 3% move anticipated. The result was a 1.3% move at the end of the day. So is Home Depot going to be another quiet candidate? Well, we have an expected move less than 3% for Home Depot, and at a $410 stock, that's I don't know, kind of amazing. Stock can really move if you think about it. A 1% move is going to be $4. So we're looking at upwards of $10 move in the stock, but that's again on a $400 stock, not a big deal. So let's move forward and talk about Spotify, because here's another potential double-digit mover for Spotify. And interesting, look at this chart. This stock has been on fire. I mean, it was $250 stock back in April. Now it's a $410 stock for Spotify. This typically is a big mover. I don't know. I'm looking at maybe a 12% move for this stock. They declare earnings tomorrow after market close. That's Tuesday, November 12th. And we will keep an eye out for Spotify, as it is on the left side of the ledger for us, which means potentially a big double-digit mover. Also, a big double-digit mover is Beaser Homes. All right, we're expecting a move here also of over 10%. Now, this stock is only a $33 stock, but you can see that it's pretty volatile. A move from mid 20s to mid 30s on a regular basis. You can see it's done this multiple times, up and down, up and down. Okay, this is a great stock to get if you get into a rhythm of buying and selling, or you don't want to necessarily day trade, but you see a stock like this and get in a rhythm and you have a little bit of patience. Boy, you can really make some nice cash. When it gets down here to these lows, as long as you're not too scared, you can step in and you have confidence that it could rally. That's a high probability trade. But we're expecting a big move, double digits on Beaser Homes this week, as they declare on Wednesday, the 13th, after market close. All right, moving on to Cisco. Cisco will also announce on Wednesday after market close. You can see here that in past earnings, we were looking at a 5% move last earnings, but the stock gapped up for about a 6.8% move. we could see something like that again. I don't think it's going to be double digit over 10% for Cisco. It has had a nice move, and I wouldn't doubt that it wouldn't maybe gap down towards 55. I don't know if it can gap down there or gap up over 60. So as a trader, I might go see if I can get a trade off where I'm selling premium, I don't know, 12, 14% out of the money. Probably not going to bring much credit, but that's how far out I would have to go to feel comfortable selling premium on Cisco, because even though it's less than 10%, and it could be right there at that number, and that could cause problems if you don't go wide enough when you're selling premium on a stock like Cisco. Okay, looking again at the next stock, Advanced Auto Parts. Boy, this stock, man, this was a $250 stock not too long ago. And what a change in fortune for Advanced Auto Parts. It's now a $40 stock, trading at $39.75. Just amazing what is transpiring here as my kind of macro view of this. And if I bring in some more data here, let's go to a weekly chart here real quick. My macro view of this is that cars are becoming a little harder to work on as the technology in them increases, and a lot of people at home don't have the tools or the technology to diagnose or to correct or fix some of the newer vehicles. And boy, look at that, $250 stock in January of 2022, and a year and a half later, is your whole corporate structure changed as far as your stock valuation. We are expecting a move greater than 10%. We will keep an eye on it. They have earnings on Thursday before market open. Definitely a stock to watch for Thursday. And then also very popular stock to watch is Walt Disney, of course. All right. Disney will announce earnings on Thursday, the 14th, before market open. And believe it or not, I'm expecting right at a 10%, maybe a 10.5%, 11% move for Disney, as things are, changes in the wind with this. And again, this is a travel destination, kind of falls into that category. Entertainment, obviously. Are people spending as much money at the parks? Don't know. We're going to find out on Thursday, but that sets up for potentially a big move. So Disney is usually one of those stocks that trades right around, gives us about a 10% move right around earnings. So you got to go, is it going to be less? Is it going to be more? And I'm looking at more for this round, just the way things are shaking out. All right. So next week, later this week, not next week. Last stock that we're going to look at here is Applied Material. All right. And I didn't get the numbers up there. My apologies. So let me just double check here on AMAT. We are looking at a move here on Applied Materials of, definitely less than 10%. In fact, I think it's going to be around 7%, around a 7% move on this. They will have earnings on, let's get that date up here. They will have on Thursday after market close. So I will add that notation here that it seems to have dropped off. And it didn't say when I wanted it to, but there you go. It's going to move right around that 7% number. So less than 10%. I do find this interesting, though, this little wedge that this is kind of creating here. And definitely watch out as this thing builds into this. This might be a little bit move. This might be a big move. But Applied Material, Thursday after market close. And again, I think it's going to be about 7%. So I'll mark that on the chart, and we will keep an eye on that. All right, so we had a trade for last week, and we're just, again, on a little bit of a roll right now. Last week's trade, we did a strangle on Expedia, and the stock, as I mentioned last week, was consolidating nicely, moving in this tight little channel. We put on this trade, it's about $1,400 worth of risk, $1,300, somewhere right in there. And then we advance through earnings and we take a look at results. And we had that nice pop on Friday. If you were quick, you were able to take some profits of around $1,000. But this snapshot is from today. It is right before we started the show. So if you were still in the trade, you have a profit. In fact, I'm just pulling up the price. Again, if we look at the chart here, it's trading right at 185. So very nice little profit there. Just tick down below it, 184.88. So it's trading up there right around that 185 level. So if we look at the results, if you were still in that trade, you can go ahead and exit at some very nice profits. We were in this for actually about 10 days, and that is a 67% return on risk in just 10 days. 67% return on risk in 10 days. Okay. And that's a profit around $950. Okay. So not bad at all. $950 for just 10 days of waiting for a earnings result. Not necessarily a bad thing. So that brings us to the trade of the week this week. We have still about hour and a half left in the trading day today. You would need to get this trade off today. This will be on Spotify, or excuse me, Shopify, not Spotify, Shopify. That is SHOP symbol, Shopify. And we're looking at a strangle here. It was priced just under $1,000, so it's around $958. But I just checked a few minutes ago. Implied volatility, as I mentioned, is racing into these options right now. So I would imagine it would cost about $1,100 to get this strangle off on Shopify. But that is what we're looking at there. Still looking at a big move in the stock, and then building in some time for potential follow-through movements is what we're looking at there. So that is our trade of the week. A Shopify strangle. Earnings tomorrow morning. We're going to know results really quick on this, and then we'll look at those results next week. So be sure on these shows, this show especially, we have the chapter feature below where you can identify the stock and just review my comments about the expected moves or the results on this. But please like and subscribe. We do it each and every week here on Earnings Call. It's a little different than all the other shows because we are trading options and we are looking for either the big movers or the nice, quiet stocks and taking advantage of them both. So everyone have a great trading week, and I will talk to you again soon. Take care.